Are you worried about pump and dump groups coming in and voting in a certain token and then pumping it and dumping it on the platform? And do you have a strategy to prevent this from happening?
Well, it's, again, with illiquid assets, it can be difficult. One, you can't manipulate the market. That's just, well, I should rephrase that. You can very easily manipulate the market, but as a transparent exchange, we will not manipulate the market in any way. However, yes, there are ways we can. One, we're going to vet every single token that we allow to be released on our platform. So if a token comes to us and they're brand new and they haven't listed with us through our ICO Express, because at that point we would have vetted the team and everything else involved in that ICO, so we'd have a better idea of who we were dealing with, we will vet that token. So going through the vetting process, we will check the team, we will check the market cap, we will check trading on other exchanges. If it's not listed on other exchanges, we will ask about the token economics of that token. How many tokens they have released, what their market cap currently is or what it will be. We will get all the details we need to do an analysis of that token. If there are red flags that we feel mean, for instance, a red flag to me, just as an example, would be someone that created a token, they went through an ICO, the ICO was not that successful, they want to put the token on our exchange, they want to provide no liquidity to that token, and at the same time, they want to make sure that they have the ability to trade their own token. That would be a red flag. Mm-hmm. That's an easy one to spot, but just to give you an example, that would be a red flag. So the vetting process will help immensely. We will also monitor our exchange. So just like, let's say, the NASDAQ or the FTSE or the DAX or any major world market has what they call circuit breakers that they can switch on and off when they see suspicious activity, we will do the same thing. If we see activity coming from 3 IP addresses in Russia, China, and wherever else that we have that might be blacklisted on certain IP lists around the internet, then we may choose to halt trading on that token until we can figure out. Now, those are extreme measures. Those we wouldn't take lightly. This is not something we would do. Obviously, we want tokens to gain in value. That's great for our exchange. That means more volume. That means more fees for us. We're a business. Obviously, we want to make money. But we also don't want notorious things happening in our exchange. So there's no way to prevent against this 100%. It's kind of like saying, I'll give you a Forex example. I know I'm a little long-winded. I apologize for that, but I like to answer things thoroughly. So the SMB event, which was the National Bank of Switzerland, January 15th, 2015, and I'll tell you why I remember that date in a second. The Swiss National Bank pulled the peg from the euro. The Swiss was pegged to 120 at the euro. They pulled it. That caused the Swiss franc to basically gain, I don't remember the exact percentage. It was huge, 80, 90, 100, I don't know. It was the Swiss franc to the dollar went down to like 20 cents on some exchanges. If you had the smallest position you can possibly imagine on a trade, on any Swiss franc pair, you lost and you went negative by hundreds and hundreds of thousands of dollars, euros, whatever. So those type of things. Now, this is a mature market we're talking about. The Forex market is 1978 is when I think is the exact date when the initial Forex market actually went to a non-fixed rate. Before that, all currencies were fixed on a daily rate at 5 p.m. New York time. 1978, that changed. We started to do fluctuating rates. So it's a pretty mature market. It's 40 plus years old. Well, I think it's 40 years old this year, actually. Yeah. So that's a mature marketplace. And we still couldn't stop that from happening. You had brokers go out of business 3 days after that because of that SMB event. I'll tell you, though, FXPig, because I'm sure that would come up as a question. FXPig had 2 clients go into a negative balance, and we lost about 20,000 US dollars. And the reason why we were able to not lose millions, which their FXCM, a big broker, lost, I think, $600 million. Oanda lost about 40 million. They were huge losses. And the reason why is that in October, prior to this, we limited leverage on those pairs to 20 to 1 because the writing was on the wall that the Swiss bank at some point was going to need to remove the peg because that peg was costing them lots of money due to inflation in the EU and the EU zone. Anyway, all these things come into play. So market maturity is a big thing that'll help us in certain aspects, but no one can stop these things from happening to a certain extent, but we will do everything we can to make sure that we put stops in place, filters in place to try and stop most of these type of pump and dump schemes.